So, you're looking to invest in your first rental property here in Dubai. Here's the difference you should consider between short-term and long-term rentals. First, with short-term rentals, this would include daily, weekly or monthly rentals, like Airbnb for example. When managed right, this can earn up to 30% more than a long-term lease. The main reason is higher prices. For example, a one-bedroom in Dubai Marina's 5242 tower rents for 10.7 thousand dirhams per month long-term, but an Airbnb 16.3 thousand dirhams per month, and it's for July, which is a low season. The price for December, for example, is 28,000. That's 3 times the difference. You can change the prices dynamically, use the property yourself during vacations, and sell it whenever you want, but there are trade-offs. First, the seasonal drop-offs. The average nightly rates for Airbnbs usually peak near the end of the year, whereas the summer period has significant drops and is considered a low season. Second, a typical short-term rental is only booked 255 nights a year on average, leaving vacancies. And third is economic vulnerability. During recessions, most short-term rentals see bigger declines. According to the US Bureau of Labor Statistics, from 2007 to 2009, the period affected by the global financial crisis, we see a 13% drop in international trips. This affected the occupancy rates for holiday homes and prices the owners could charge. Now, if you prefer less risks, you'll want to consider long-term rentals. Here are the benefits. First, they bring more consistent income with minimal vacancies, because tenants are signing for a year or longer. Second, cash is paid up front in Dubai and tenants pay with 1 to 4 checks per year. But as the owner, you'll get a nice prepayment up front. And with lower maintenance, you'll have a low-risk property with profits coming in steadily. However, there are also trade-offs. First, you have lower returns, because longer tenancy means lower average nightly rates. Second, you're locked into rental price. If the current rent of your property is less than 10% below market value, you as a landlord is not allowed to increase it. But even if difference is up to 40 or 50%, only a 20% increase is allowed, meaning you have a very limited flexibility compared to short-term rentals. And third, you can't evict tenants unless they fail to pay, sublet without permission, use the property illegally, or cause damage. Overall, your choice depends on your goals. Short terms for higher risk and higher returns, long terms for stability and less hassle.